Hey everybody, welcome back. It's the HPS watch list for the week of January 22nd. It is another Friday, and I am here, and Paul's on the mic. And boy, what another unbelievable HPS watch list week. A bunch of them are hitting targets today on Friday. Remember, the HPS watch list goes out every week to the members of Day Trading Radio. The reason I say this at the beginning of the video is because usually the video is cut in half. First section is a review of the HPS setups, some news, anything else important that we need to talk about, market radar, stuff like that. And then the second part, we talk about the new setups going into. I'll split this video in half. The first half go out to the public and to the members. The second half go to the members. All right, so this is kind of, I'm actually showing you a couple of active HPS setups, so consider that a bonus if you got that. But as you can see, we've, since Kellogg, and Kellogg was the only one that really stopped out, the ECL back here did hit its stop, but we decided to hold on to that, and it ended up going up and hitting our target, continues to move higher. So that's also kind of a tough one. I put a gold star on that, also meaning it hit our target and we held on to it, even though it did touch our stop for a second. But that stop we discussed was a little too tight, and we said we could probably just maintain that level and look for it to continue to push up. So if we look back here at the HPS, what a run we've had. I mean, I'm just scrolling back. This is actually week after week. The setups that I bring to the members, actually every time you see a green dot, that means a setup has activated. A gold dot or yellow dot means that the setup has hit its profit target. A red dot means it has hit its stop before it hit its profit target. The last time that has happened, way back here, when I took a short in Aflac. Aflac. I remember that short, and I got stopped out of that. But even though we had another short back here in the Pfizer, which worked out great, that was an HPS divergence short. But as you can see, fantastic results on the HPS. So I'm always, always very proud to bring you this every week. I spend a lot of time on finding the next big setups. The key between the HPS setups is that we want to put them out, and you want to see that big explosive move in the next 5 days. So this is a weekly watch list that goes out on a Friday. Hopefully I get it out early enough that people take advantage of it. But it's basically for Monday, Tuesday, Wednesday, Thursday, Friday of the next week. You watch over the weekends. You take your positions if you want on Monday. It's great for even traders who are not in front of the computer every day. You could actually set up your platforms, or, these are not scalps. These are swing trades that tend to work as scalps, because when they do start to move, you could get an easy move on them. But even better, they tend to get the biggest bang in the shortest amount of time. We look for a move. A perfect trade on an HPS is basically a move, a decent move in a 3 to 5 day period. So the first thing we're going to do is just kind of go over some of these. I did notice that some of them just hit its target this morning, but we're going to just go over the ones that were set up for this week. Mondelez, textbook one. Textbook, we banged the table on this. We took this trade. Most of the setups are going to be based off the HPS methodology. The HPS methodology is a high probability methodology based off of years and years of me putting together a system that are based on 5 important indicators, and the confluence of these indicators, everything lining up. We have a playbook on the site, which is our typical setups. This one is what we call a coil stochastic channel breakout with a wedge pattern and a divergence. Each one is usually a different setup. We tend to look for divergences mostly, and when we get those, we automatically get in them, and we just make some money. So here is the Mondelez. It was a textbook one. I want to show you 2 types of charts on these, actually, just to kind of go over them with you. It's easier for me to show you two different ways of looking at them on our one chart here. AWK is one also that you're going to see. Just put this down here. And, use this as an education portion of the thing. This is why I like to send this out, to kind of get people familiar with why we take these stocks and why they move, so you can eventually apply it to your own stocks and find these. So here was a recognizable channel. When we talk about recognizable channel, we talk something that we call a 1, 2, 3 pattern. We have to have 3 pivot areas, 1, 2, 3, and then you trade 4, 5, and 6. And when you have a channel and a divergence, you know when the channel is going to break out. Now, I go over this every single day on the show, DayTraderRadio.com, so a lot of stuff, a lot of education could be found there. From that point on, you know, when we see the divergence and we see the lower trend line, that's where we get in and we look for a pop up. And as you can see here, we adjust our profit zone. We put our profit zone in. We put our buy trigger in and our stop, and then we let the trade play out. And as you can see, it only took about 4 days to hit its target. It hit its target yesterday, or the day before yesterday, actually. It actually took 1 day to hit. It shot right up there. It was beautiful. So, you know, we took that down for a nice profit, and that one's in the books. We go back here to the setups here, and we'll go to the AMT, which is not, well, actually I'll save that for later. The AMD, let me see what I want to show. That's still active. When that was green, it's still active. Watching means it has not hit its trigger yet. So I'm going to show you this one anyway. I'll show you this American Tower. Now this was what we call a 200 EMA breakdown channel line bounce. It's a typical pattern that I love to trade. 1 pivot, 2 pivot, 3 pivot. And when you have a trend line come underneath us like this, and the 200 period moving average cutting through us, we look for a fast move down to the lower trend line and a bounce back up. You know, in this case, the market was so strong that we never got our tag here. We actually just started moving right back up. So you can see we just kind of popped and chopped. It's still active, so I'm going to keep it active on there. If we update it, I'll update it for you if it needs to be updated, but it is still active right there. Nothing has changed. It hasn't hit its buy zone yet, so it does not, you know, automatically turn green. It says setup initiated, but we're in a watching state. All right, watching state. Now ADM, very rarely do I get into the ADM setup here. And the ADM gave us what we call a mid-pattern or mid-rotation divergence. And more about that is talking about the divergence that happens. There's 2 stages to a divergence, stage 1 and stage 2. Stage 1, typically on a buy side, happens underneath this 20 line. Stage 2 happens above the 20 line. So stage 1 would require the price, and I'll give you a good example. Here's stage 1, the stochastics over here, right where my mouse is, comes down under the 20, we make a low. Here's your low up here. Stage 2, market bounces and then comes back and takes out the lows, but the stochastics maintain that 20 level. So you have this higher low, and you have a lower low on the price, and from that point on you get an explosive move. So it's actually, you can see, look back here, and you can see there was a divergence here to give it an explosive move, and here we have another one that's setting up like that. So that's why that one ended up going on here. It's currently active, and it's chopping around. It hasn't really fully gotten through the buy trigger. It did pop it, but it did not get any follow through. Pretty decent candles. This is still active, nowhere near its stop. It's still very active near the buy trigger. I want to show you a different chart of it right now so we can break it down a little. And you can see this is a bigger trend line on top, and we're looking at this trend line. It pushed up against the 200. There's a little gap. We broke down. We pushed back up to the trend line. We're kind of pulling back and rotating. This morning I just kind of made a mention that, you know, seeing this stochastic oscillator start to get overbought. When we do take our longs, everything is set up for us. Everything is set up for our longs. When we take a long, we usually get a long with the stochastic oscillator rotating up, you know, so we have that momentum. And like here, so we had this little divergence, and you have this nice little move, and we did have a little move off that divergence. We didn't really get a big pop, but now that we're extended, we have a shot of actually pulling back. But we see we're starting to fight against this trend line. Even though we're rolling over here, we're still looking for this trend line to break. But your ideal trade is, and always is having this in your favor. Once this runs out of steam, or at least gets back into an overbought level, you have to consider what you want to do. The bigger picture might want you to hold on to it, or you might say, you know what, I didn't get enough on this and we're kind of overbought. Let me just move on and wait for the other one. This is kind of one of those weirder, slower trades on the ADM. You don't see this type of setup on the watch list as much, but still active and very nice. I like it. I have 200 shares here at 40.67. So right around our entry zone, and I do expect to pop back up here. So we're just going to let that percolate. I want to just go back to Mondelez just for a second here, because it's such a good example of what we look for. And remember, if you're deciding to hold this one on further, the setup on the Mondelez, I'm talking about maybe even a bigger picture hold on this. The weekly here, the pop up here, starting to make its move back out of this consolidation. You can see it's turning back up, but look at the big consolidation there. Basically, lasting a year, 2 years of consolidation, less than 10-point range, and we got a nice cross back up here. We got a nice flag breakout. That's all on the weekly. The daily had the divergence, so it told us where to get in. And then the next level we'd bring it back down to that 60-minute time frame. And if you could see, whenever we have a channel, we have what we call playbook plays. And this is kind of first we have our initial trade. We have our initial playbook play. And then we have what we call secondary trades. After the first, the primary trade is set up and you have a breakout, what's your secondary trade? If you want to continue to take this, you're going to go to different time frames. So if you look at that 60-minute time frame, look at the channel and look at the rotation. We have a playbook play as called the channel breakout stochastic rotation. And the stochastic rotation brings us back down to that 20 line. And whenever you have a breakout of a trend, remember your trend is defined by this trend line, and a line is defined by a bunch of points, and you put that straight line through those points. So you have a directional I have a directional trade here, a downward directional trade. Once you break out of that, you have a new trend starting to form. And what we do is we look for that first pivot, and that's that's really the reason behind waiting for that rotation, letting this get oversold enough. And lots of times we'll find that price come back down to that trend line. And as you can see, we tagged it to the penny. I mean, that just shows you and kind of confirms how important it is to understand different time frames and these playbook setups. All right, and from that point on, you had that nice bounce. Now the daily still looks good. On the breakout, I think that this actually gets back up here to that 45, 46, and probably even higher. So I just want to touch base on that 60-minute time frame. All right, so we were looking at the ADM, right? What do I want to bring up here? I'm looking at adding to a couple of these. Some of the setups are so good that even though they're not, really ripping here, they still are showing some good strength. And the bigger picture here, you can see the bigger picture is kind of this falling wedge pattern. Now, we could actually pull back here a little bit further and actually test a lower level, which would actually take us underneath the stop zone. But I like these candles being put in here. You had a big candle back here, reversal. Now you have a big reversal candle happening right now. And we'll take a look at that 60-minute time frame again, and you can see that 60-minute got oversold. So you have that 60-minute, your secondary time frame, trying to rotate back up, and that's actually a good sign for this one. By the end of the day, when you get this video, this might have already gotten back into an overbought level, and this might even be different. But looking at the charts right now, I'm seeing new highs coming into this market. Things are looking really good, and this still continues to look as a great setup going into next week. I'm not going to add to this. I'm already holding it, 200 shares. I don't think I'm going to pick up any more, but I think we have an easy, probably a 2-point move on this coming up. Here we have what we call a 2020 trade. Now, 2020 trade, kind of one of the newer playbook trades that have really never been defined on paper, but what it is, it's just buying into strength. when you have a rotation here, or a stock that pulls back to that 20-period moving average, and you have a rotation back here, that's showing great strength, absolutely great strength. These stocks tend to be some of the stronger stocks in the market that are coming off of all-time highs or 52-week highs, and I call it the 2020 trade. And again, you still want to have the other indicators lining up. You want to have a recognizable pattern. So right here we have a channel flag. You have the 20-period moving average support. That's another indicator. It's a playbook play, and you have an underlying trend line here also that's playing out. And as you can see, we were in this nice 6085, and we just click on that, and that's exactly what we want to see. You know, actually came down to that trend line, ran that trend line, and hit its target today. So congratulations on that. And again, that's all we have to do, is just to have the discipline and the patience. You know, sometimes I use both of those words. Patience is really important to let these things show up and let me get them out to you. Let me find them. You know, don't try to just trade, you know, randomly. If you could find a setup that works all, you know, majority of the time, why not? Why wouldn't you wait for it? You know, it adds to your odds. And if you start adding other things in there that doesn't have a high probability results to it, then you're bringing your overall results down. So that's the important thing. You know, having patience to let these things set up, and having discipline to understand that this is the way to trade. Let's go to the next one. And hey, these go out, and I basically walk you right through them. I mean, it's pretty incredible to get into a trade and see it move in the next 5 days, the next 4 to 5 days. You see that aggressive move, and we tell you the direction and stuff, and it's all based off of these little things that we put together. Here we have AJG. It was a HPS setup, and not a stock I've ever traded before. So I put it up there because for one reason. It was a divergence setup. You know, let me bring that up on the chart over here. So just give me a second here. Got so many things going on. AJG. Now, Arthur Gallagher and Company, it's a insurance broker. All right, so again, not the biggest fan of insurance brokers trading, but when you go back and you see, hey, this thing tends to pattern out well. Here was a divergence back here and a nice move. Here we had a beautiful divergence. You had your low and your lower low, with the low and the lower low, and then everything here lined up here. Now, go back to the setup. Not expecting a lot on this, but if you took the trade, as you can see, we hit our target today. Nice little move up out of this based off of the divergence. And it probably could move higher. Anyway, that one hit. I'm very happy that one hit its target for you. All right, CB. Divergence channel. Fantastic setup here. Whenever we have two channels that we could trade, one channel, the big 1, 2, 3 channel, and then we have a tighter channel that kind of broke down here. Once we break back into the original channel, that tends to hold up. The original trend line here, integrity of that line, that bottom line right there, where we put that stop, is very good. So at that point, we're going to look for this minor channel inside the bigger channel to break out and the price to move back in. Buy trigger 144. Divergence channel, good company, boom, same thing. So all these hitting their targets this week, all of these performing excellent. Like I said, the only thing that didn't really perform last week was the Kellogg. That was our last, and I'm actually still in Kellogg, and I want to go over Kellogg for you. Kellogg had a little, we actually had a different type of trade here. It wasn't a pure HPS trade. I put it on here. It was a breakout trade, and I wanted just to get a little bit further move here. And what happened is we did get a little move, and then it rotated back, and we had like really extreme selling in the sector. The consumer defense stocks, they all pulled back aggressively with 3 big candles. As you can see, it dropped off 1, 2, 3, and now we're starting to build back up. Now, effectively, what we did was we pulled back to the channel line, And even though it hit its stop and the trade is no longer active, I am still long this. I am still long. I'm down a little on it because I picked it up here, but I do think we're going to move back up, and I want to show you why. And it probably could initiate a new trade off of this. So let's take a look at Kellogg. So we had this underlying trend line. We had a pattern here. We had a pivot area here, and a pivot here. So I made this channel line. You can see we came down to it, and there's an old trend line. So it was almost an X marks the spot, and then we actually held it and starting to move back up. The stochastics got oversold. I think this was kind of just bad luck. I think there might have been something out there that caused these candles to really drop off. The volume came in, and you could see this across the board on some of these packaging companies, these food packaging companies. A lot of these companies all gave us these three big candles down and then starting to bounce. So there was something out there that kind of spooked this group, and and that'll happen sometimes. I always talk about having a great setup and all of a sudden getting some news out that just messes up the setup. ECL was a good example. Was it ECL a good example? No. Well, ECL actually was a great trade. We took profits on this. I'll go back to that one right now. So we decided to hold on to that one. I said that stop is real tight on that KHC. Let's just go through a couple of these. And again, if you go back to the HPS setups and you look back at all these that have triggered, what a great resource for you. This is a great resource of stocks, of patterns. You could click on any of them and go back and actually just learn how to trade by looking at these and understanding what I'm looking at. You'll see, and actually when you update it, you can actually see where the price is now compared to where it was then, and it might actually be at a better place. So I always use this and say, all right, is there anything here that I like? Well, here, this was Budweiser, and it popped up, and there's nothing here that's standing out for me to say, all right, this is another entry. But you can do this. You can actually rotate through all these and just, Alaska Airlines, that was a fantastic. We've traded that multiple times, as you can see. And whenever I do put a new setup in here, I usually try to keep the old setups on there. So here you had the original buy zone. It pushed up. Then we had another buy zone, and then let's just push that button there. And then it pushed up and hit our target. We haven't been in it since, but like I said, if we could come back and start to look at, this might actually be a divergence. I'm seeing a low and I'm seeing a lower low. Now that might make me want to look at ALK again and see if there's a new setup setting up. Nothing right now on it, but just checking. It's all about waiting for these things to set up. You don't want to take anything that doesn't. I want an exact perfect setup. It's easy enough to get them. It's easy enough to get these perfect setups. You just have to have patience. Here's a kind of example right now. This was a fantastic setup. I mean, a huge channel. 1, 2, 3 pivots. Trend line on the bottom, trend line on the top. A breakthrough to the 200 period moving average. This is a multiple indicator, HPS setup, any way you look at it. All right? And as you can see, I had a very tight stop in here, saying that this, has so many good things working for it. Really, the big thing here was this 200 EMA breakdown, channel line bounce, and that's where we put the target. But, it doesn't mean that we can't head higher. And sometimes you go back and you look at these and see how they performed. Look at how this came off that trend line, busted through, hit our target, actually chopped around, and now is up against this trend line. So there's actually a possible pullback trade happening right now at 239, 240. Now, would I consider this a short, an HPS short? Yeah, possibly. But the market has been so strong that it is a dangerous endeavor to take that short. But here you can see that trend line right there, and we're kind of right on it. So you actually had a nice move, channel within a channel, divergence, breakout, 2020, everything about this was perfect. Now you have a push back up to a resistance. If you're in this, I would take it off either way. But hey, does it pull back off of here? Maybe. I'm not gonna speculate on that right now. It's showing some good strength. All right, so that is the current setups. Now we're in some new ones that are going to be on this watch list this week. I'll give you a couple gems here before we switch over to members only, and you'll have to be a part of the Day Trading Radio membership crew to get the rest of the research here going into next week, because it's basically free money. I hate to say that, because I don't want to sound overconfident, but some of these setups here just are perfect. We got into Philip Morris yesterday. Was it yesterday we got into it? And look at it today. Huge pop on this. Huge. And everything here looked good. It was so close. It was really good. We'd love to set up here a downward channel. I want to put that on the watch list, so you'll get that one. And then another P stock here, Verifone. Been banging the table on this one. There's a slight little trend line. This is a higher risk trade because of the price and the action on this. Typically, we want to take these HPS setups over $40, but this one still looks interesting to me, and I actually like this one. We're up on it nice. The Mondelez, the Philip Morris, the Verifone are good. The Fastenal, not 100% HPS, but it gapped down on earnings, and we're expecting this to go up and close a gap and push a little bit higher. So just going to update you on that one also. Like I said, holding the Kellogg, ADM, we went over those. The AWK was the one that actually got caught on news. And when we got caught on news, this was a good setup right in that X marks the spot, and there was a downgrade there. And when you have a downgrade and you have a move, and if it looks like BS and it smells like BS, then, like I said, we should hold on to that position, look for it to push right back up. Look at this chart, a very nice chart. It just continues to push higher on the daily. The weekly chart, I mean, you can see going out 2011, 2012, so every pullback is usually an opportunity on this. And look at the rotation, how fast that happened on the weekly. The rotation on the weekly happened real fast. The daily happening real fast, so you have everything here pushing back up, and for the last 4 days you've been seeing a series of higher highs on this. So AWK actually looks good. We're in it, and still looks fine. Alright, so that ends the updates section, and we're going to start off on the new HPS setups for this week. Alright, so I want to close off the video for the for the public. And again, please come by DayTraderRadio.com. Subscribe, you'll get the daily watch list. You get a lot of different things, the dashboard, the everything. There's hundreds and hundreds of videos we put out all the time talking about our style of trading, our dashboard, our community of traders. We have a tremendous community of traders in our chat rooms. Hundreds of traders gathered all the time that trade this methodology. So we have a team that's always digging these out, and we'll bring them up and we chart them out and send them out. So hope to see you over at Day Trading Radio. Until then, we'll catch you next week. If you're a member, please stay on the video. You'll continue with my new setups.